Well, several times here on Business Weekend, we've highlighted the company WiseTech and its chief executive and founder, Richard White. Well, WiseTech is now our 17th biggest ASX-listed company, not far behind Transurban, Woolworths and Telstra. Richard White is now valued among Australia's 10 wealthiest people. Now, all this shows is that a globally significant tech company can actually be based in Australia, that we can create businesses from the ground up. This week, WiseTech said its underlying profit in the past financial year grew 15% to $283 million. The revenue jumped by 28% to just over $1 billion. Paid a full year dividend of 16.9 cents a share. But the key here is its forecast. In the current financial year, it expects sales growth of 25 to 30%. And most important of all, a profit margin on EBITDA of between 51 and 52%. And that forecast sent WiseTech's share price up 30% in just 3 days, from $92 to $120. So I spoke with Richard White after that profit result came out and just asked him if the result surprised even him.
It didn't surprise me, and it didn't surprise the people around us. I think we had a plan. We tried to talk to the market about the fact that we had some big products to release, and we were delaying those products for a little while. A couple of things happened. We just got really focused on efficiency last year, and we had a significant upside in terms of our profit. We entered the last quarter. We exit rate at last quarter was 50% EBITDA margin, which is back to its glory days. And people were thinking that it was going to take us a couple of more years to get back to that. We also have been, beavering away, building some really cool things that are going to make a big difference to logistics and a big difference to our customers and to our shareholders, of course.
Before we actually get to the business itself, the one thing that stood out to me, two things really. One was that return, the actual fact that you make software and incrementally any money you get through the door goes straight to your bottom line. It's astonishing in terms of the margin. That's one thing. The second thing was that you spend 35% of your revenues on research and development.
And that's true, and that is something that people talk about all the time, and we obviously do that. But here's the real thing. You can spend $1 on R&D or $1 million or $100 million on R&D and get nothing. Or you can spend some money and get a lot. And what the best thing you can do is just be the most efficient product developer that you can possibly be, and spend all of your time obsessing about quality, obsessing about value, and making sure that you build things that are really powerful, that make a difference. And we've spent 20 years really obsessing about how to build great software. Okay,
but you have been going at this for 20 years. You're not a startup by any circumstance.
No.
You're 3,500 people. Does growth become harder the bigger that this business becomes?
So this is what the industry calls base effect. You've got a big base, it's harder to grow because every time you have to grow, you've got to grow off the base. It's a big percentage. But if you look at the really big technology companies, they don't have this problem. And I think technology companies generally, and WiseTech in particular, can grow as long as it's an innovator and as long as it can solve the problems that are really there that make value for our customers and for the world. You can't do it if you're just going to turn up every day and do the ordinary things. You've got to do something innovative and special. You've got to be remarkable. You've got to have breakthrough products, and you've got to revolutionise the things that you do.
Okay, so the revolutionary thing you have done is to be able to move goods around the world without the sort of hurdles and barriers that were once there. It doesn't matter whether it's customs, doesn't matter whether it's moving through warehouses, doesn't matter whether it's moving through different countries. One platform, one piece of software. That's where you're getting your growth.
It is true. The great thing about it is there's still lots of problems to solve. Even though we've solved a lot of problems, there's still lots of things that don't work right. And in particular, we talked about container transport optimization in this result. And what we're doing there is we're solving a really big problem that everybody's been trying to solve for 20 years, but they've been trying to solve it by using force, by saying pushing harder on the truck driver, harder on the port, whatever it is. And that doesn't work. It just creates choking situations. If you go back to the root cause and analyse what's really going on, it's an unmitigated mess that hasn't been solved because nobody's looking at the actual problem.
And in fact, if you think about the price of containers, it was one of the things that caused global inflation, which saw this period of higher interest rates that people have had to withstand around the world.
That's absolutely correct. It was a huge driver because the spot rate for containers went from $2,000 US for a move from China to the US to $20,000. I mean, nobody expects a 10 times improvement in price. It was good for the shipping lines. Some shipping lines made more money in 1 year than they made in 50 years. Good, more power to them, but it has an effect on the economy and it starts to creep into inflation, and then suddenly you get this runaway problem that we've been dealing with. Luckily, WiseTech isn't really that affected by those things. We're much more affected by solving complex problems in new ways that make value for our customers.
Okay, so then you have been able to build this business by making bolt-on acquisitions along the way. Now, is it a problem for you that as you get bigger, that those acquisitions have to get bigger to make a difference to this business?
No, actually, it's quite the reverse, because the acquisitions merge into the company and disappear, and in fact, they have no independent existence. The components that they owned as individual businesses become rewritten, placed into the core platform and part of the application suite that we offer customers. And in fact, without those acquisitions, we would not be what we are today. We would not have solved the complex problems that are, think about trying to open up and solve a problem in France or in Colombia or in wherever, where you don't speak the language, you don't know the customs officials, you don't have any customer contacts, you don't understand, you can't read the documents. These acquisitions are really catalysts to allow us to continue to grow. They are fuel for the fire.
So is it possible, you're in 38 countries now, to continue to be an Australian-owned, Australian-based company trying to service those 38 countries?
So when I'm outside of Australia, I'm very international. I don't really talk about Australia because I don't think it plays well. It's just a data point. And it's important for you to be able to talk to the world as if you're a world citizen. When you're in Australia, I'm incredibly proud to be Australian, and I really want people to understand that Australians can actually bat way above average, like we do in swimming at the Olympics. We can be very good at something if you focus on it.
Yeah, so in that particular case, isn't it the model here that an Australian technology company can be based in Australia? It does not need to be based, in America. It does not need to be based in Europe. It can be based and can be built here in Australia.
Sometimes you have some sleepless nights flying on planes with jet lag and so forth because of it, but it's definitely worth it. I think we've proven that you can do it from Australia, and nobody believed that, but it's absolutely true. You can do it from Australia.
All right, so let's go back to that growth story we started with, because the growth has been exponential up until now. The question is whether there is a period where the annuity style income stream that you receive starts to slow down that growth. What I'm saying is you've got software as a service, it's money coming through the door so long as you keep your subscribers. Can that continue to grow in the way in which it has over the past few years?
Look, if we took a conservative view and said, well, we've done enough, we don't need to invest anymore, the business would be an incredible annuity business. It would be even more profitable than it is today, but its long-term goal would be, the growth would be quite flat. If you take that you're an innovator that also has an annuity, dividends and profits, and you continue to invest wisely and efficiently, you can have both growth and profitability and cost effectiveness. But that takes a bit more effort. It takes a little bit more intellectual heft to do that, but it's very doable, as you can clearly see.
And just a personal question. I noticed on the stock market with the shares going up today, I think your wealth went up by more than $1 billion today.
I did it.
I did, right? Are you any different today than what you were yesterday?
No.
Does it make a difference?
It's fun. It's like winning a game of cards or playing a chess game. It's fun. It's interesting. I mean, I like the challenge of making things better. But a lot of people would have thought I'd retire a long time ago, but this excites me immensely, and I'm doing such great things and having such great fun, and I've got such great people around me. It's what I do every day. What else would I do, Ross? What else would I do?
Richard White, always good to chat to you. Many thanks.